Hello everyone, welcome to Trade Breakdown on EU. In this video, I'll be walking you through two trades. Now this past week, I took three trades. I've already broken down the first trade in the video that I uploaded earlier. Now let me break down the next two trades for you. One of those trades was a win and the other one was a loss. And as always, I'll break down everything in a step-by-step manner so you can understand exactly why I took these trades, what my thought process was, and what I could have done differently and what I could have done better. So first off, let's talk about the trade that I took on Tuesday. I'll explain my exact reasoning behind this setup, what I saw in the market, how I planned my entry, and why I executed it the way I did. Now, as you guys already know, my whole trading approach is built on three key aspects. The first one being directional bias. Directional bias tells me which way I want to be trading, meaning that it takes care of the where aspect behind my trade setups. Then we've got narrative. Narrative helps me build a clear story behind my trade idea. And then we have market context. And market context allows me to time my entries properly on the lower time frame, and along with that it helps me find key supporting factors to back up my trade idea on the higher time frame. Right? These are the three key aspects behind my whole trading approach and behind every single trade that I take. Right? Now this directional bias takes care of the where aspect, right? It takes care of the where aspect behind my trades. Narrative takes care of the why aspect behind my trades, and market context takes care of the when aspect behind my trades, right? So I know exactly where I should be trading, why I should be trading, or why I should be taking this setup, and exactly when it is appropriate for me to take a trade, or when is not appropriate for me to take a trade, right? These are the three key aspects. And I always make sure that I frame my entry, right? Frame all of my entries based on these three key aspects, and I make sure that they are all aligned with each other before I take or execute any trade. Now for this trade, if you watched my weekly outlook, then you would already know that I outlined the high time frame drawn liquidity and my directional bias in that video. I stated that my directional bias for the week was bullish, right? Meaning that I was primarily looking for long trades. And right here, you can see that this high was my drawn liquidity. This was my main target, and I was expecting price to reach this high and take this high as the drawn liquidity, right? If you want to know exactly why I anticipated this high as my drawn liquidity, then watch the outlook. Now, based on weekly profiles, right here you can see that Monday formed the low of the week right here and straight away expanded from here, right? Now this expansion higher had not reached the drawn liquidity, which is this high right here. So that led me to expect Tuesday to continue Monday's price action higher towards the drawn liquidity, right? On Monday, we expanded higher, but we hadn't reached the drawn liquidity, which was first of all this high and then eventually this high right here. And because of that, I expected Tuesday to continue higher and expand higher towards the drawn liquidity, right? That was my directional bias on the higher time frame. And after determining my drawn liquidity on the higher time frame, I then went down to the 4-hour time frame to build a proper market context and narrative behind my trade setup. Right here, the Tuesday's candle opened right here, right? During the London Open session, I was first of all expecting a retracement down towards this 4-hour fair value gap before we could continue higher, but instead price straight away expanded from here, right? And during the New Year session, what happened is that this 5 a.m. candle closed above this swing high. Now this closure of this 5 a.m. candle, this 4-hour candle above this swing high was an important signal for me, because if price had closed below the swing high, then I would have been a bit hesitant to look for long entries. Instead, I would have expected a deeper retracement before a continuation move higher or before an expansion higher. But since price closed higher above the swing high, that confirmed my expectation of bullish momentum, and it made me more confident in looking for a long setup, right? And right here, after closure of this 5 a.m. candle, we had formed this new fair value gap on the 4-hour time frame. And this FVG was crucial because it provided a high probability area for price to retrace to before continuing higher, right? And and in this context, I took this 5 a.m. candle as my candle range, because below this candle range, we first of all got this fair value gap, and this is a continuation candle range which I can expect to be purged to look for a continuation trade on the lower time frame before price expand higher, right? And you know that a market always moves in market profiles, right? It never moves in a straight line. It always has these retracement profiles in between these expansions. And you can see right here, this candle was the lower time frame retracement profile, with which it took out this candle range low and tested this fair value gap before it continued higher and had this expansion, right? So my expectation was simple. I was expecting price to take out this 4-hour candles low, right? This was my 4-hour candle range, right? My 4-hour CRT, and I wanted price to tap into this FVG. And once inside this FVG, I'd look for a long setup on the lower time frame. And I also wanted this candle range to get purged at a key time, and it did got purged at a key time during the London close session, which increased my conviction in this trade idea even more. Now let's go down to the 15-minute time frame to see how I framed my entry uh, around this candle range, this 4-hour candle range. Right here, you can see that this is the 4-hour candle range low. And what happened is that during the London close session, right, during this time window, price came down lower and purged the 5 a.m. candle range low and tested the daily fair value gap. And when price was right here, I then expected price to reverse from here and continue and expand higher, right? Right here, you can see that we purged this candle range low with this exact candle, with this particular candle. I was expecting price to close above this candle, and once price closed above this candle right here, it became an order block. And I took my entry at the high of this order block, since price closed above its high, with my stop loss being below this order block's low, and I had a target of a static 3R, right? And you can see price respected the order block, tested it, expanded from here, and it ultimately reached the target. Now, overall, this trade was a great example of how I combine higher time frame buys, narrative, and market context to find high probability setups, right? This exact trade idea had all the necessary key ingredients for a high probability trade. Because the purge happened at a key time, we had a 4-hour key level, a 4-hour candle range, the drawn liquidity was in line with us, and all of this aligned with each other at a key time. And my entry also happened to occur at a key time, and price expanded straight away from here and reached the target. This was the first trade that I took on Tuesday. In the next part of this video, I'll go over the second trade, which ended up being a loss, and I'll analyze what went wrong and what I could have done differently.